Good morning, and thanks for joining us on today's Crypto News Podcast. We've got a packed show ahead with major developments in the world of tokenized assets and some key updates on the regulatory front.
That's right. Ondo Finance has just unveiled its new tokenization platform, Ondo Global Markets, or Ondo GM for short. This is a big deal as it aims to bring traditional assets like stocks, bonds, and ETFs onto the blockchain.
Exactly. This is all about accelerating the onboarding of traditional assets to the blockchain rails. And with Ondo Finance being a leading issuer of tokenized real-world assets, this new platform has the potential to bring institutional grade financial markets on-chain.
So, what does this mean for the broader crypto market? Well, for one, it could increase liquidity and accessibility for investors looking to get into traditional assets. And on the flip side, it could also attract more institutional investment into the crypto space.
That's a great point. And speaking of institutional investment, we've got some interesting comments from Senator Tim Scott, the chairman of the Senate Banking Committee. He's saying that two key crypto bills, one on market structure and one on stablecoins, will pass within the first 100 days of the Trump administration.
Yeah, this is significant. The White House AI and crypto czar, David Sachs, held a press conference on Tuesday outlining the administration's legislative priorities, and it seems like they're moving quickly to regulate the industry.
It's worth noting that these bills have been in the works for a while now, but with Senator Scott's comments, it seems like there's a renewed sense of urgency to get them passed, and that could have major implications for the crypto market.
Absolutely. So we'll be keeping a close eye on these developments and exploring them in more depth throughout the episode. But for now, let's take a closer look at Ondo Finance's new tokenization platform and what it could mean for the future of traditional assets on the blockchain.
Sounds good to me. And we'll also be discussing the potential implications of these new crypto bills and what they could mean for the industry as a whole.
Right. And as we dive into these topics, we'll be referencing some of the key themes that have been emerging in the crypto space over the past few weeks. So stay tuned. It's going to be an interesting conversation.
Building on what we discussed earlier about the intersection of gaming and blockchain, a new move-to-earn game called Stepmania has launched on Telegram. The app combines fitness tracking with digital rewards, allowing users to earn in-game benefits for their physical activity.
That's an interesting concept. The idea of monetizing daily activities like walking or running has been around for a while, but integrating it with a popular messaging app like Telegram could give it more mainstream appeal. What do we know about the token launch plans for Stepmania?
According to reports, the token launch is planned on the Open Network, or TON, which has been gaining traction as a decentralized platform. The app already integrates with Apple Health and Google Health Connect, so it's likely that the token will be used to incentivize users to reach their fitness goals.
Speaking of incentives, it's worth noting that the success of Stepmania will depend on the token's utility and the overall user experience. If the rewards are significant enough, it could encourage people to be more active and engage with the app on a regular basis.
Absolutely. And it's not just about the rewards. The social aspect of the game with leaderboards and squad challenges could also play a big role in its adoption. It's a clever way to gamify fitness and make it more enjoyable.
Shifting gears a bit, there's been some interesting news coming out of the U.S. Securities and Exchange Commission. According to a report by the New York Times, the agency is scaling back its specialized crypto enforcement unit.
That's a significant development, especially given the SEC's previous stance on regulating digital assets. What do we know about the reassignment of agency lawyers and staff members?
Apparently, more than 50 lawyers and staff members who were focused on regulating digital assets have been shifted to different departments within the agency. This could signal a change in the SEC's approach to crypto oversight, although it's unclear what the long-term implications will be.
It's worth noting that this move comes as the regulatory landscape for crypto is still evolving. With the changing administration and shifting priorities, it's likely that we'll see more developments in this space.
And it's not just about the SEC. Other regulatory agencies around the world are also grappling with how to approach crypto regulation. As the industry continues to grow and mature, we can expect to see more clarity on the regulatory front.
That's a great point. As we continue to follow these developments, it's clear that the intersection of crypto, gaming, and regulation will remain a key theme in the months to come.
Yesterday, we were discussing the implications of institutional investors shifting their focus towards Bitcoin, and it seems like that trend is having a ripple effect on the market.
That's right. If we look at the Ethereum to Bitcoin ratio, it's hit a 4-month year low, currently standing at 0.028. This is a clear indication that Ethereum is underperforming relative to Bitcoin.
A 13.8% decline against Bitcoin over the past month is significant. It raises questions about the long-term prospects of Ethereum, especially considering the technical challenges it's been facing.
Building on what we discussed earlier, it's possible that institutional investors are favoring Bitcoin due to its perceived stability and security. Ethereum, on the other hand, has been dealing with issues related to scalability and gas fees.
Speaking of institutional investments, a publicly traded Canadian firm, Neptune Digital Assets, has made an interesting move. They've purchased 1 million Dogecoin, worth nearly $258,000, to augment their Bitcoin reserve.
This is part of a growing trend where companies are loading up their balance sheets with leading cryptocurrencies. It's not just about Bitcoin anymore. Other assets like Dogecoin are gaining traction.
What's notable here is that Neptune Digital Assets is focused on amassing and staking crypto assets. This purchase suggests that they're diversifying their portfolio, potentially to mitigate risks or capitalize on future growth.
It's also worth mentioning that this purchase was made on December 27, and the value of Dogecoin has been relatively stable since then. This could be seen as a strategic move, considering the current market conditions.
As we continue to see institutional investors making moves in the crypto space, it's essential to keep an eye on these trends and understand the implications for the market as a whole.
Absolutely. The relationship between Ethereum and Bitcoin, as well as the diversification of portfolios with assets like Dogecoin, will be crucial to watch in the coming weeks and months.
We just discussed the recent uptick in institutional investment in the crypto space, and it seems like that trend is continuing. Bloomberg is reporting that Bullish Global, a crypto exchange backed by Peter Thiel, is considering an IPO as early as this year.
That's right. This is a big development, especially considering the company shelved its public listing plans back in 2022. It's clear that the current market optimism is giving them confidence to revive those plans.
Absolutely. And it's not just Bullish Global that's feeling optimistic. We're seeing a lot of companies in the space expanding their operations and making big moves. Case in point, Blockstream just opened a new office in Tokyo as part of its expansion in Asia.
That's a great example. Blockstream is a well-established player in the Bitcoin technology space, and their expansion into Japan is a big deal. They're planning to drive adoption of Bitcoin Layer 2 and self-custody technologies in the region, which could have a significant impact on the local market.
And it's worth noting that Blockstream is co-founded by Adam Back, a legendary Bitcoin developer. His involvement lends a lot of credibility to the company's efforts, and it will be interesting to see how they navigate the Japanese market.
Japan is a unique market, to say the least. They have a very specific regulatory environment, and it can be challenging for crypto companies to navigate. But if Blockstream can succeed there, it could be a big win for the industry as a whole.
Building on what we discussed earlier about institutional investment, it's clear that companies like Bullish Global and Blockstream are positioning themselves for long-term success. They're taking advantage of the current market optimism to make big moves and expand their operations.
And that's what's so exciting about this space. We're seeing a lot of innovation and experimentation, and companies are willing to take risks to achieve their goals. It's going to be interesting to see how these developments play out over the coming months and years.
Speaking of which, we should keep an eye on Bullish Global's IPO plans. If they do decide to go public this year, it could be a big moment for the industry, and Blockstream's expansion in Asia is definitely something to watch, especially if they're able to drive adoption of Bitcoin Layer 2 and self-custody technologies in Japan.
Absolutely. We'll be keeping a close eye on both of these stories and bringing you updates as more information becomes available.
We've covered quite a few significant stories today, but I think one that really caught my attention was the brief downtime experienced by the XRP ledger. The fact that it was able to self-heal is a testament to the resilience of the network.
That's right. The incident highlighted a potential vulnerability in the consensus process, but the fact that the validators were able to recover and get the network back online without any significant issues is a positive sign. It's also worth noting that this is exactly how the Ripple CTO described it would play out. If all validators think something's wrong, they refuse to send validations, and the network essentially pauses until the issue is resolved.
And I think this is a great example of the kind of self-regulation that we see in the crypto space. The network was able to identify the problem, respond to it, and recover without any external intervention. It's a really powerful demonstration of the decentralized nature of blockchain technology.
Absolutely. And speaking of decentralization, I think our earlier discussion about the relationship between equities and crypto is worth revisiting. The report from Citi suggests that as the adoption of digital assets grows, the correlation between Bitcoin and the stock market is likely to weaken.
That's a really interesting point. We've seen a lot of talk about the connection between crypto and traditional markets, and I think it's clear that right now stocks are a major driver of crypto prices. But if Citi is right and the correlation between equities and Bitcoin does weaken, that could have significant implications for investors.
Definitely. I think one of the key takeaways from this report is that as the crypto market matures, it's going to start to operate more independently of traditional markets. And that's a really exciting prospect because it suggests that crypto is going to start to carve out its own path rather than simply following the lead of stocks.
And I think regulatory clarity is going to play a big role in that. As we get more clear guidelines from governments and regulatory bodies, I think we're going to see more institutional investors getting involved in the space. And that's going to help drive growth and adoption, which in turn will help to weaken the correlation between equities and crypto.
That's right. So, what are the key takeaways from today's stories? Well, first and foremost, the XRP ledger's ability to self-heal after a brief downtime is a testament to the resilience of the network. And secondly, the correlation between equities and crypto is likely to weaken as the adoption of digital assets grows.
And looking ahead to the rest of the week, I think we're going to see a lot more focus on regulatory clarity, particularly in the US, with several high-profile bills making their way through Congress. I think we're going to start to see some real movement on the regulatory front.
Definitely. And as always, we'll be keeping a close eye on the markets, bringing you the latest news and analysis as it happens. Thanks for tuning in, and we'll catch you all tomorrow.
And don't forget to follow us on social media for the latest updates and behind-the-scenes insights into the world of crypto.
See you tomorrow.